Good morning, everyone, for who's joined this webinar this morning. Thank you once again for taking the time to join us on our weekly webinar, Lessons in the Lockdown. Again, it's great to see the numbers that have joined us. I know we've had some really good feedback from people who just enjoy tuning in for 30 minutes once a week, just to catch up on what's happening in the world of property and what's happening potentially in their own local area. So it's about providing information, it's about providing data that may help people specifically in decisions they're making right now, or it might just be giving them information to make the right decisions for them and what they should be doing. So most of you know me, David Johnson, CEO of Leo Crowdfunding, and my co-host is Mr. John Corey. I'll let him introduce himself.
Good morning, everyone. I'm looking forward to today's session, see what Alex has to say.
So what we have been doing these last number of weeks is really specifically around the whole concept of strategy. And strategy is probably a word that's been used more in the last sort of 9 months than probably in the last 9 years in the world of property, as people have tried to navigate through what's happening with COVID and the changes in the market, and have been, I suppose, questioning their own strategy. Is it still going to work? Do they need to make any changes? And for some people, they're happy with their strategy. Others are definitely changing their strategy, because of the changes in the market. So we're on this round the regions. We've done Scotland, Northern Ireland, and Wales, and now we're going to deal with England today. We may break it down in future webinars and look at some regions individually, but we wanted today just to give the broad brush over the regions in England. So again, remind everyone, we don't use the chat box. If you want to participate, and we really encourage you to participate, please use the Q&A, and we'll be able then to deal with your question there and sort of allocate to the right person on the panel. And certainly our guest today will be more than happy to interact. And again, there are people on the webinar who are property professionals in their own right, so very keen to hear your analysis. If one of the panelists says something you disagree with, tell us in the Q&A, or if you do agree and can confirm that, again, please tell us. So during the week, we had a special guest, and when we went to the social media, I just didn't have Alex absolutely tied down 100% confirmed, so I didn't want to put his name all over social media and him then say it and say, well, I actually haven't 100% confirmed. So we went with this mystery guest, and as you can see already, it's Mr. Alex Impey. So good morning, Alex. Delighted to have you on the webinar today.
Morning. You should have just kept me as mystery guest instead of hyping me up. I think it's probably better that way.
It's curiosity. Curiosity is a great thing to have sometimes. So no doubt when people tune in just to see who is the mystery guest. So all's been revealed. So Alex, introduce yourself to us, please. A bit of your background, what you actually do, and that's sort of who is Alex Impey.
Yeah, sure. First of all, just like to clarify, I'm not a member of the Village People, as this photo may kind of indicate. That's not the case. It's just a bit of photo shoots there. But as David kindly and John have kindly invited me on, just first of all, thank you for that, guys. But who am I and what are we doing with XUSA? We're a little bit different than probably the normal developers or developers who you might have on the show. We're very much a niche developer, and we focus on an age range between 18 to 38. And there's a few reasons behind that, but they're the biggest growth range within cities and semi-urban areas. And it was something I wanted to be able to contribute and give back to and support growth in that area, and the opportunities for younger people and how they can eventually contribute back to the wider economy and society. And when we do our developments, David and John, we really focused on the next evolution of living and what that would look like. So the way I try to describe this for people who haven't heard of this kind of use of product model, look at things holistically, look at human contentment holistically, and it comes out of 4 items, essentially, what will give the platform for great human contentment. First is a great place to live. Second is a great place to work. A third place is somewhere you can have a really fantastic time to socialize with friends and colleagues. And the other part is well-being, both mental and physical. And so what we try to do with our developments is we create all of that on site. So essentially what you've got is on-demand, end-to-end living, where you've got everything at your doorstep. And then what we do is we have all of this plugged in, but unlike traditional developers who'd make the exit, we then move into operations, and we then curate the community, which is focused around development, education, and supporting the resident to be the best that they possibly can be. And so we really take an active involvement with the residents. You know, and one of our real big focuses is mixed use and mixed tenure. So the best of commercial and the best of residential. And we don't just focus on home ownership as the end opportunity, but we have renting, we've got co-living, and more importantly, we welcome and we bring in social and affordable housing all under one roof. We don't discriminate. We don't try and commute our Section 106 or Section 75 obligations. We bring that in, and we work with long-term partnerships with local housing authorities and local authorities. And it's this overall product which we're bringing to the market these days. And I think you've got the right perfect slide there. So I'm really glad that you popped on our kind of what we call the massive transformative purpose. John probably knows what this is, being his background over in tech sector before, but MTP, that's about basically it's our vision, but it's a really fancy way of saying it. And it's to make quality living both affordable and enjoyable for everyone. And that's really what drives us, what drives me, gets me on all of these webinars, and makes me still quite animated to talk about this thing. And yeah, as you said, help provide quality housing to the UK market.
Yeah, brilliant. I think what's really interesting, and one of the reasons I was really keen to get you on, is that, you know, if we were having a conversation or doing this webinar, say 10 years ago, and you were talking about the concept of like living and working under the same roof, I mean, most people would have thought that we were mad, because it wasn't the culture. It wasn't what you did. You had a house, you left your house, you went to work, and then you come home from work and forgot about work and got on with the rest of your life. The changes in this last, I mean, even pre-COVID, the changes in things like your WeWork, you know, type spaces where you could do more than just work. You can do your gym and you can meet people and socialize. And then COVID has just completely transformed that sector, and you're so aligned with where the market is right now because of your vision.
Yeah, and just to put out there, I didn't have a crystal ball. We came up with this concept about 2 years ago, and then obviously COVID's just accelerated the need for this end-to-end bespoke living, but in a way that's can plug into a physical and a digital network, and that's what we try to hover between. So you can suffer the pandemics and really provide a fantastic service to the residents, because that's the key here. It's all about customers. It's not about the developer making cash. It's about how do you make your residents the most happiest as possible. And then they'll
stay. An interesting thing, David, if you roll back 150, 200 years, whatever, pre-industrial revolution, the crofters, the trades who would have the shop on the ground floor and the living above, or the craftsmen, the guilds in London, all these things. So there's a long history, human history, that living and working, the farmers even today, living and working is sort of what you do from the same place. And it's this industrialization that creates offices and factories, and that's fine, but it is part of our DNA to do either. And it's very jarring. This whole 2020 period has been quite jarring for people working from home, at least for some. There's a few of us who are maybe pioneering it just because we wanted to, but it isn't within the possibility of this could be the new normal. And we want to socialize, as you said, gyms, sports, whatever. We don't necessarily have to do that in an office. It's an artifact of a time period when things were paper-based. So,
yeah, no, very, very interesting. Yeah. I love the fact, Alex, you mentioned not having a crystal ball. You'll have to find a crystal ball for the last question on the last slide.
I'm being told. I'm going to dig one out.
We'll come back to that. So, okay, let's dive into this. And again, because of your, from the Northeast, obviously now living in the South, and then done business all over, again, you're the perfect person to discuss sort of the English market in general. So we have these sort of 9 regions, 56 million population, and then you're looking at, average across the whole of England, 239,000, but of course that really doesn't mean anything because of the disparity in the regions. So to me, the stats are really a little bit incidental in that sense. So let's let's get into to this one, which I think is an interesting. So you've obviously got London, which most people almost call an economy in its own. The southeast is sort of well in the lead, but the rest of the regions, and Wales just happens to be in that, so ignore Wales. The rest of the regions are all very similar. If you take out sort of the south, the southeast, and maybe east. So what's your sort of view of the English market, or how do you view it from your business perspective when it comes to where you do business?
Yeah, well, as you can tell, my accent's from the northeast, and I have got a lot of passion and love for that area. You know, it raised me, give me a good education, and you know, opportunities to where I am today. But there is a huge disparity, mainly driven by wealth and the fact previous governments as well. And this is not a political piece, but you know, we didn't have that stimulus in those regions because it wasn't seen as politically or economically of interest to the overall development of the UK. So often you find that those opportunities which come down, you know, through into education haven't been, you know, really distilled and grown in that area. So it does make things really tough when you, especially as a developer, where your biggest driver in many of the cases is your GDV and your ability to exit. And, you know, if you don't have strong GDV values, then how can you fund development in these locations? And that's what's historically stopped development. You know, how many developers, probably you've seen, David and John, say, I'm an active developer in the northeast of England? I could guess you can probably count that on one hand. I mean, we're one of them, and we're doing a project now right in the centre of northeast, which embodies this XUSA model, which I talked about earlier, which we're hoping to kickstart. The problem with this, though, is purely because often the build cost reflects the same price as your sales value. So if you've got a build cost and the sales value the same, you know, how do you make your profit there? And what you're trying to find in the Northwest, Yorkshire, and areas in not that kind of northeast and northern belt, you're having to look more towards strategic alignments. So with local authorities, local housing authorities, and this public-private partnership. And that's what we're doing. And we're a big exponent of that developers need to encourage and foster these relationships, because local authorities, local housing authorities, they have land. They may have funds, not many of them, they're quite tight now, but they don't have the commerciality that perhaps a nimble developer does. And also Public Works Loan Board increased over a percent last year, which has really forced loan, and you know, from those sectors, it's quite tough now to actually get good quality money. Whereas in some cases, developers can actually access funds a lot quicker and easier and at good attractive rates. And it's that exit entry piece, and that's what we try to focus on to help improve those areas. So yes, to answer your question, we still see a big disparity, and that can probably put people off investing in those areas or developing in those areas in terms of residential piece, but it shouldn't be the case. There is ways and means around that.
Very good. You know, that's very, very interesting. So in terms of, again, I thought that's quite interesting. You go back to 1985, and obviously there's various factors in that. I know John talks a lot about, you know, sort of pre-Thatcher and the whole concept of you know, home ownership within the UK or within England. But it's interesting that in just 25 years, where everything was more or less the same price, you could say, certainly under 100,000 average price of property, to where it is now, where London's like 3 times other parts. And again, that disparity. And I'm keen to hear from both you, Alex, and John on this. So what exactly were the drivers that meant London northeast, or sorry, the southeast, southwest actually increased in value? Was it based on fact? Was it based on people's just ideas, and then you get a run on prices just because people have a fear that they're gonna you know, lose out on a rising market? What were the drivers?
So let me start with a little bit by going back even further. The peak population in London happened late in 1939, 5 months before World War II started. The Germans then proceeded to rearrange the housing map and the office map in London by blowing things up. We also had 2 million cars across the whole of the UK, where now more people in London have a car than that. So when you look at the shifting demographics, what you saw was a net outflow from London and the population dropped to the point where it lost, I think it was 8 points of the million, drops down to 6 million by the 60s. You saw the same in Manchester, Leeds, Liverpool, and the cities of the north, 45% reduction in demand for housing by people moving to what became suburbs, and they could commute in. So you fundamentally had falling demand. So of course, price compression. And what this doesn't necessarily reflect is the microcosms. The other thing that's underlying this is right around 99 is when the London population passed the old peak. So 75 years down and then back up, we pass it, and now we're on this growth trend. So we've filled in all the sort of bombed out places, all the derelict warehouses, because the population is now heading towards 10 million. That causes fundamental supply demand challenges, particularly if you have planning and you restrict how fast you can build things. The other sort of macro force is in the UK, there's something like 33% of the population has an advanced degree. In London, it's 20 points higher. So if it's 33, it's 53 in London. People earn more, they can pay more, they will pay more to be in London for the jobs that pay them higher wages, which is why Alex and myself, I grew up in the equivalent of the Northeast, made Bradford look like a nice place where I grew up. So what you see is actually quite a bit of underlying differences, and it isn't political, it isn't whatever else, it is a lot to do with economic. The whole idea that you can work, 10% of all the taxes from all of Britain comes from the City of London and the related financial industry in Halifax and Bournemouth and a few other places. Financial services pays for 10% of all the bills. So these are the key drivers that have a lot to do with this curve.
Yeah, I'd echo that. I mean, look at the wage disparity between a central London mean average wage in the Northeast. I think it's like 25 to 30% last time I looked, potentially high depending on what sector you work in. And so, you know, we live in a capitalist country and people are inclined to do the best they possibly can. And, you know, as a human race, we are city and urban dwellers. It's yet to see if that'll change post-COVID. I don't think it may decline slightly, but I think overall the trend will still be to go where the jobs are and where the best opportunities are, and those are city centres. I think 2/3 of the global population by 2050 will be living in city centres. And I think in London, it's something like 73% is the projection up until 2030. So that really has a reflect on, you know, why, and if you're getting all these people in, it's a supply and demand thing. As John said, it's only naturally going to rise the price, increase the prices of property, especially when you've got a footprint which is so dense and you are, you know, short on square footage for actual build. You're constrained on your build opportunities. It's not like, yeah, go on, John.
Two other points. One is London and I think Bristol are the only two cities that take in more in taxes and pay it out than the rest of than any other city in the country. So London and Bristol is subsidizing everywhere else. London as an economic entity, as a city boundary with the economics, is bigger than Northern Ireland, Wales, I think it's East Midland and Scotland combined. So with this whole Brexit thing, what if London leaves? There's no country left to pay the bills.
Yeah, I think, you know, that it shows, is it right? I'm not saying that's correct, but you can see the reasons why, which has driven this wedge in terms of growth. And yeah, based on opportunity perspective.
And Alex's business model is about community and cohabitation and co-working and micro community, or, you know, little village, but in an urban setting. And if you can live and work in the COVID world from the same place, you spend your money locally, you earn your money locally, and you can sell to the rest of the world, well, you'll pick where you want to live based on lifestyle. You're not going to pick it based on where the jobs are.
Yeah, that's what we're trying to drive, the habit change, essentially. I mean, if you look at the UN global goals, they've got 17 of them. We were really driven by number 11, which is creating sustainable cities and communities. And, you know, that's the, you know, the UN's purpose is to really drive community driven and, you know, kind of go back to those days that John kind of mentioned, you know, where we had shipbuilding and mining communities living and working in the same place, but together. That's what's going to drive, and especially the younger generation now, that's what they want. they're a lot more on demand. They're not looking at the traditional models of home ownership or anything like that. They just want services and to have something that they can plug into and utilize.
Yeah. So John actually mentioned the hot topic word at the minute, COVID. So in your experience currently, just sort of a brief overview or any anecdotal conversations, evidence you have, how have you felt COVID, I suppose, influencing your own business personally, and then just the impact it's had currently on the market?
Yeah, it's a tough one. I've suffered, I guess overall the model's strong, and we've seen a lot more investor and corporate involvement because they like the model, they can see how it can function and see how it can regenerate town and city centres. So I'm seeing a lot more engagement with like local authorities, local housing authorities, and doing that at quite a high level. So that's positive for us. But on the other side, we also had the negative sides where, you know, we had banking institutes withhold loans on an indefinite period because they didn't know what was going on. So we've had to then revert to alternative sources of funding, and you know, SaaS is one of those, utilizing my own SaaS and that of other people's. But that, I guess, in some ways, it makes you a little bit more smarter as a developer and an investor because you're driving into new ways of working. I think we can all say, not just from working at home, but we're looking at ways to not move around the bank, but looking at alternative funding investment models. And so I think that's probably a positive overall.
Okay. In terms of then growth in declining sectors, someone's asked a question here which sort of leads into this a bit. Do you think the boom of remote working will change the imbalance in house prices in the UK? I suppose that leads into if this growth sector that you're involved in does really take off, what impact will that have on the current imbalance?
Yeah, I sit on the fence a little bit, but I would say no. I think the general sentiment, I don't have any facts and figures to build this on exactly, but what I'd say is the overall sentiment of the market is that people, although they like the flexibility of home working, they still want to have some form of engagement with colleagues or a way to get out of that home environment from mental and physical well-being perspective. And so I don't think, you know, a lot of developers were looking at, do I build in a new office? Do I create some home working opportunities? We go the other way and say, well, create a whole habitat for those workers and bring it on site. That's what we do with the XUSA model. We create a co-working and a collaboration space so people can, yeah, if they need to, they can stay in the house, but at the same time, then they can get away to work and leave that environment and plug into another community. I definitely see co-working and co-living moving up in terms of profitability and the amount of investment opportunities which will come on board, especially as we see, you know, kind of inadequate living, a cost of living increase in general, and the rise of, you know, younger generation wanting that flexibility. They don't want locked in contracts. They want to be able to move around as and when. And so I definitely see we'll see an increase in that, David.
So I think there's a funny issue that people tend to think of what they had and then pine or want more of it to bring back the past. And they have funny observations of it that they think of the good parts of bad parts. So I don't know that we need to go back to offices in the strong sense. I think there's a human condition that says there are times when you work well alone. There are times when you work well in collaboration. You need to, in a sense, make that rather fluid. You want to get away from the kids, or you want to get away from the wife or the husband, or whatever the social dynamic is in the home. And then other times you want to spend family time midday because that's when the cool thing's happening with your daughter or son or something. So if we think about maybe university life, people cohabitate, they sort of do their own thing, they group together, they go to classes, they study online. If we think about some other paradigms for how people behave, you look at the creative industries, whether the arts, whether the movie industry and things, or even the software industry, we would have, I used to work a lot in it, we would have spaces, common areas where you could sort of randomly talk to people, but we also had the need for quiet spaces because some of the things you do, you don't want to be bothered or distracted or sharing an office and all the noises and all the problems. So we are reinventing how the definitions, but possibly we're moving closer to how we're biologically wired, that we want contact, but we want contact our own terms. We want space, but we don't necessarily want space with other people in it all the time. So, there's this, I think we will see some changes in housing. People might want extra space for an office or extra space to work when the children are still there. And at the same time, they want easy commutes, but they don't want to have to commute 5 days a week at the same time with everybody else, elbow to elbow.
Yeah, I think I'm a big believer in the hub and spoke model, which has been around for a long time. The health industries have done this for a long time, but I think the rise of hub and spoke in office, where you have basically a central hub somewhere, and then you've got the smaller spokes, maybe in smaller counties or smaller regions or towns. We're seeing already, for example, we're buying a building in Guildford right now. And the owner of that building wants to exit out of all of their town centre locations, only concentrate on city centre locations. And this is a big insurance company in the UK, well known. And they were like, no, we just want to have our hub, and when we'll allow people to work from a spoke perspective. And I think that also can be pushed across to living as well. And you might find smaller communities outside, but then there'll be a central location to socialize or have that fluidity that John talked about, whether it's work, live, socializing, or well-being.
Yeah. Okay. So down to our last few minutes, then someone commented, one of the attendees, that they agreed with the human contact discussions that were put forward there. So I think that's a very, very good point.
Just a quick example. David's running a company. He's based in Belfast. He has staff in London. Today's session, Alex is south of London. I'm in London. David's in Belfast. We have Switzerland represented. We have Wales represented. We have the Isle of Man represented. So it's a much more fluid world, and it's much more people can jump into things. And I think Alex is actually in a session later with another group, which is the group I just left. So the ability to move between that in 2 minutes, and not oh, it's going to take me 30 minutes to get to the event, or I'm going to have to do a phone call for a conference call because I'm at an event. No, we can collaborate this way, and then we can meet socially. We can meet for collaborative sessions, maybe, and with a whiteboard back when it becomes reasonable to work within reasonable.
Or a glass of wine,
distances.
John.
Yeah,
kind
exactly.
of preferable way.
I just did a virtual whiskey tasting thing over 8 days, and there were people from all over the world taking part, and it was culturally fun.
Yeah, I like the sound of that. I remember that. I'm going to put those into my development. I've stole that one. Thanks, John.
Very good. Well, on the other stream of people moving into city centres and having this co-living working space, as you said, John, some people might want more space. So there's also a trend almost at the opposite end of the scale. People saying, you know what, I want out of the cities. That's perhaps where the population is at its densest, therefore more risk of COVID. Get me out into the country, get me a bigger house in the country where I can then choose when I want to go into the city, but I want the space to be able to be in the country. And some people may say that as a bit safer in the current environment.
Well, living in the city through this whole lockdown period, I don't think it's safer actually outside of the city, and the data doesn't sort of reflect that. I think it reflects how people choose to engage. But what I think is a twist on what you just said that complements it is people now need a desk space. They don't just need a bedroom. They can't do all their meals out and meet all their friends out. They need the ability to sort of have a multi-purpose space. There are people also that are a family unit that is a bit cooped up. They are looking to move out to have some space, maybe their children to run around, maybe to have a separate office or something. So I think how we consume space is changing, and you'll see people moving out, you'll see people moving in. One of the big things, my son's in New York, and he said, one of the big things of being in New York is all of the benefits. Well, you can't go to plays, you can't go to restaurants really, or very limited. The bars aren't really the way to go. So a lot of the attractions of the city are removed. And that is a problem for people who are like, why am I paying all this rent when I can't do the things I want to do? So moving out of the city is a big positive if you can do things you want to do. And I think we'll see a rejigging.
Yeah, I want to just add into that. I mean, one development we're doing right now is in a semi-urban area, we call it, which is up in Aberdeen, but we're in a park called Dice, and that's just outside of the city centre, a lot more space. And we did this on purpose because we realised, there's people who don't want to be in the city centre, and so we're trialling urban and semi-urban. where you've got more space essentially. And it all comes down to amenity and external plus internal. And we had a big battle with the local planning authority about what is the definition of amenity space, because they push amenity space as external. And I was like, no, I mean, you know what? Aberdeen, probably one of the coldest places in the UK. How often can you use this external space? Like, come on, guys, you know that better than anyone else. Surely internal space, such as community streets, co-working, gyms, bars, cafes, they count for more than any external space. And so, you know, and they eventually came around to understanding, because this is a new model, but, you know, the focus is on amenity and offering good quality amenity. And in semi-urban spaces, you can offer that. And I think that, you know, having that balance between urban and semi-urban is really important for the right kind of customer.
Okay, so we need to wrap this up. So I'll give you 30 seconds, Alex, just to look into that crystal ball that you managed to find, and how does your business and the property market look in 2 years' time?
Well, we've got a very strong target of hitting 880 homes. I hate the word units because it's so faceless. Homes to create across the UK. So I'd like to think that will be our 5-year target. So that's what we're aiming for. I'd like to think we would be close to that, and have really established ourselves as as one of the leading contenders for mixed use living in the UK. And that's really important to us, is offer that mixed tenure and a completely diverse way of living, the next evolution. So that would be our hope from a business perspective. Okay.
Well, listen, thank you very, very much. We'll give you a chance just to say a final goodbye just in a minute or so. So next week, delighted that we'll be joined by our strategic director, Aisha Afori, and we're going to be looking at the sort of world of property investment, but from an investor perspective. We do a lot with developers and fundraisers. So next week, we're going to pivot and look at sort of this whole market through the eyes of investors. What do they look for? How do they sort of analyze deals, and particularly around this idea, we call it vanilla projects. There's a normal development project, you know, land secured, the planning approvals are already in place if it's required, maybe senior debt in place, and all that's missing in the capital stack is the equity. And that tends to be, for a lot of developers, the challenge. They can get the debt, but they very often can't find the equity, or realize that to even look for the equity involves being aware of regulation and compliance, and therefore they're conscious of that. So we're going to look, Aisha's going to look very much at why do investors like these vanilla projects, and we're also going to introduce our new member of staff next week on the social media and marketing side. So we'll introduce Asher next week and hear from him as well. So very looking forward to that. Obviously, you know, you can reach out to John and myself via LinkedIn. There's my details there. You can do a quick screen grab or take a picture with your mobile if required. And John and I are available for consultancy. We can do a quick 20-minute call with you initially. And then if there's benefit and value to you, then we can sort out a consultancy package where we will help you in whatever way we can expand your business. So that is us for today. And just seeing any last minute comments that have come in before we wrap up. Yeah, just a few people saying they've really enjoyed today, and that's grand. So Alex, I'll let you sort of say a last sort of 10-second goodbye, and then John, and I'll finish off.
Yeah, perfect. I just want to say, first of all, thank you to David and John. Much appreciated for the opportunity, and also to speaking to your community today. You know, we're really big in the affordable sector. I've got a podcast on that, and it's about how other people can get into the affordable sector. It's called Innovators in the Affordable Housing. And, you know, if there's anyone interested in development or in housing or in general, the investment principles, I'm always there. I'm an open person. I can always give my experiences. I can't give advice, but I can definitely relay my experiences, and hopefully that helps you guys on your own journey as well.
So Alex, how do people find you?
Yeah, perfect. So really good shout. So you can find me on LinkedIn. If you just type in Alex Impey. You can get me on my personal email address, or my work email address, should I say. It's alex.impey@XUSA, and that's xusa.co.uk. I'm on all social media, and as I mentioned, you can find me in the podcast, or even just giving David or John a nudge, and I'm sure they'll pass my details on as well.
Yeah. Right, so thanks very much. It's been really insightful. Some really good feedback and comments there. And I'll put back to your screen so people can do a quick screen grab so they can get you on LinkedIn from there. Is it the same image on LinkedIn? No?
Yeah, across all, yeah, exactly.
It's all about brand.
It is your branding. I actually think, Alex, it'd be well worth having you back in a number of weeks' time to talk in more detail about your model of this co-living. I think it's a hot topic, and I think we can actually do on that, John, maybe in a few weeks' time and focus on that.
Works for me.
Maybe have one or two of you on. I think that'll be useful. So listen, thanks very much, everyone. And for all our attendees, once again, hope you find it valuable and have a really successful end of the week. And of course, above all, in the current climate, stay safe.
Cheers, guys. Thank you.